If there's one thing we know, it's that the government loves to manipulate the housing market, and this is a national emergency, and the Trump administration has caught up to that fact, with Scott Bessent saying just the other day that we're in a national emergency and that the administration is exploring all options. Let's dig in what this could mean, what they could do, how this could impact the housing market, and is it truly possible for Trump, who's a real estate developer, to come in and save the housing market after we're so far gone? We're already seeing prices drop in the majority of metros. We're seeing an affordability crisis around the country, and we see wages not keeping up with the payments that are required to actually own a home, causing the median home buyer today to be 56 years old, which is a record high. It's absolutely incredible. So let's dig into what they're actually saying. So here's Scott Bessent. He's the Treasury Secretary. He says, we may declare a national housing emergency this fall. We're trying to figure out what we can do, and we don't want to step into the business of states, counties, and municipality governments. I think everything is on the table right now. So this is something that they're talking about around the clock. It's very important to them because, frankly, we are absolutely in an affordability crisis. The number of transactions is at the great financial crisis level lows, and that's a huge problem for the administration. Why? Because real estate is about 18% of GDP for the US economy. And it's a multiplier, right? Because when you buy your house, you also buy appliances, you fix up your house, you're hiring people, you have moving costs, you're employing a ton of people in the industry, including real estate agents earning a commission. And that causes a multiplier effect. This is a very important aspect to the real estate market and to the overall market as a whole. And it's my interpretation of what we're seeing the Trump administration do. They want to pump the market as much as possible. They want to bring the stock market to all-time highs. They want to keep prices of everything as high as humanly possible to continue to drive investment growth here in the United States. So this is what he said. The Treasury Secretary told Reuters rents were now dropping, which is important for Americans who do not own their home, which is a significant amount of people who are now doubling and tripling up in homes because rents are too expensive. So rents coming down is a good thing. He said he was expecting an increase in real estate transactions and home sales once interest rates began falling. We don't know if that's actually going to happen. We've been hearing that interest rates are going to be falling for the last few years, and they haven't, which could encourage people who are more locked into lower rates to put their existing homes on the market. Yep, we're seeing that lock in effect, so he understands that, which is great. Bessent said the Trump administration was also exploring ways to simplify permitting and encouraging the standardization to boost construction, which would boost housing supply and help bring high costs down. Bring high costs down. The problem is that we're seeing with the builders is they don't build in affordable price points. They build in the four, five, $600,000 price points, so they can get huge margins on these sales to dual income families. So I'm not sure, bringing construction costs would probably just have their margins go larger. What has to happen is these prices need to come down on houses, not that we need to make it cheaper for builders to build houses, because I think they would just take that profit themselves and not pass it on to the consumers. That's my personal opinion. I don't think the government should be manipulating profit margins of home builders. I don't think that's a good strategy. So it depends. I will be surprised to see, does the government step in and actually want to improve the system, or is it just another thing where the government's basically gifting money to the housing industry? So we'll find out. But of course, we're in a national emergency. Rates have been going down since the 1980s, and basically go to zero. And now we're seeing the inverse of that. Obviously, when prices go down, when rates go down, prices go up. And when rates go up, prices come down. That's just the inverse relationship between interest rates and asset prices backed by debt. This is no surprise that we're in this type of crisis right now. It's actually something that could have been highly anticipated and is expected to play out very seriously over the next 12 to 18 months here as we see prices drop around the country. Another concern on the interest rate side is that we had that tariff news come out about the US might have to refund the tariff money because it's getting challenged in court. Obviously, the stock market and the real estate market did not like that, and the bond market did not like that today. And we're seeing 10-year Treasury actually spike upward. This morning, it was up almost 10 basis points. It's come down a little bit since then. But this is something that we're going to continue to see, because the idea is that those tariff monies would help to reduce the budget deficit that we have that's causing our rates to go up. And we saw the 30-year go almost above 5%. But look, it's not just about lowering mortgage rates. Why are we in such a crisis right now? And one thing that is surprising that's coming out is that we have housing inventory is actually dropping in a lot of areas around the country and locally here in Jacksonville. This is a phenomenon that we're seeing locally because we're seeing sellers essentially rage quit their listing after putting it on the market for 3, 4 weeks and then realize they're not getting offers or showings at the price that they want. And they decide, hey, I'm not going to sell this anymore. I have a low interest rate. Why would I sell this asset? I'm going to just keep it and figure out what to do next. Maybe next year, maybe the market will come back. Well, that's why we're seeing so much inventory come on the market and then come off the market, is because these sellers are basically rage quitting. Lowering mortgage rates would help that seller obviously make that transition and move into the new house because the lock-in effect wouldn't be so serious. But the problem is they can't sell their house because the next generation does not have the money to be able to afford it. We are absolutely in what we call a payment crisis. Consumers now are 100% focused on what their payment is. And it's just like with car loans, and we'll show you the data on that and how they fixed that problem later in this video. But we're in a payment crisis. You can't afford a $6, $7, $8,000 monthly payment on your house. So when that happens, then the buyers just simply can't show up. The sellers need to reduce the price. And obviously, having a national emergency for real estate from the Trump administration would have a massive impact on that as well, potentially. But it could also make the situation worse if it just makes it more profit margin for the builders. That does not help the end consumer. The consumer needs relief. They're loaded up with debt. We have student loans, crisis that's also going on alongside this. The next generation is just absolutely getting crushed right here. So let's look at what's going on with the mortgage rates versus home buyer demand. As you can see, we saw mortgage rates in that teal line move up, right? And right now we're about 6.5%. Rates obviously bumped up today. And then we see the purchase applications just completely fall off a cliff because people realize they can no longer afford these payments. We're actually seeing a small spike in applications recently in the marketplace, but they're not buying because they see what the cost will be on a monthly basis. And they say, hey, it's actually cheaper for me to rent than to buy. So then again, those sellers are just having their house sit. They're not getting showings. The feedback is that their price is too high. The seller saying, I don't need to actually sell. I'm just going to sit on the sidelines and wait for a better market, which they can do, but there's no guarantee the market will actually be better next year. My prediction is that the market actually is going to be about way worse next year. Can at least see a 10% price drop across Florida over the next year. So you need to be careful if you're a seller and you have that mindset. Talk to a top professional in your local market. If you need help, I'm more than happy to help you out. Just reach out to me. But the marketers understand that consumers are all about the payment that they make on a monthly basis, and the price does not matter as much anymore. So look at this. This is the total payment. You can see that it went from basically $2,000 on a new mortgage per month to almost $3,000 within a short period of time, just from 2021 to basically today, 2022. You see that spike. That is simply because the Fed raised their Fed funds rate about 4.25% in such a short period of time, and it just cracked the housing market. Meanwhile, multifamily rent, it's gone up quite significantly, but now it's actually starting to come down. So the gap between what you can rent for and what you can get a new mortgage for is widening. And basically, it makes more sense for people to rent than to buy. And that's a huge problem in the economy because most people in the next generation, they use their house as basically like a savings account where they're putting money away every single month. The next generation, if they don't have a house, they're not going to have that savings account and their wealth will be basically nothing. And so we're starting to see this huge wealth divide in generational shifts of money. And it's a huge problem that we will continue to see in our lifetime. Prices are up 4x versus income. Look at this. This chart is mind-boggling. This comes from Fannie Mae, the Bureau of BLS, in author calculations. So this from homeeconomics.us. This is the home price to income ratio index from 1975 when they started tracking it. But you can see that the prices are up 4 times higher than the income. Back in the day, you could buy a house on minimum wage basically. It wouldn't have a problem. But now you need 4 times higher than that, and people just aren't getting paid enough to be able to afford these payments. And that's why, I think they're starting to say, well, we have a housing crisis. Do they understand that this is simply because the middle class is getting hollowed out? I don't know. They're loaded up with debt and they can't afford more payments. What is going to happen to all these people who are basically priced out of the market? And it's 56-year-old folks or older who are just trading houses back and forth to each other. And the younger generation is just doubling, tripling up, or staying at home. it's a huge, huge issue. So look at this. This is the real mortgage payment price index. This is one of my favorite charts, but it basically just shows, and this is in Phoenix, the Case-Shiller home price index adjusted for inflation and mortgage rates. We're at one of the worst levels of payments ever from a home price and a mortgage rate and an income perspective. And look at that. It's pretty much as bad as it was during the great financial crisis when we saw that massive run up. And this is a huge problem that we're continuing to see across the board. And we expect I don't think that interest rates are going to come down personally, unless Trump is able to push the Fed to, lower rates, which could push the long end of the curve actually higher. So there could be negative consequences to that, but I don't see interest rates coming down anytime soon unless they start doing quantitative easing, which he just doesn't, the administration just doesn't have control over that. Is something that is done through the Federal Reserve, through the Federal Open Markets Committee. And I don't think that anything in the marketplace warrants, expanding the balance sheet of the Federal Reserve at this point in time in that regards from a real estate perspective. But there is less demand for the mortgage-backed securities. We do know that because people are a little bit iffy and sitting on the sideline for the real estate market. They understand what's coming. So look at this. The household income is about $80,000, a little bit past 2020, but the home prices have just completely spiked to 428,000. Again, it is just really, really challenging to figure out what you do as a consumer to be able to afford a house today. And let me hear in the comments, like if you're looking to buy a house, what is the problem? Is it the price of the home? Is it because interest rates are too high? Is it because of the combination and it's the payment? I'd love to hear from you on what you think. So look, this is the stats from Zillow. Home buyers need to earn 80% more than 2020. That's insane. And the income has only risen 23% in that time. Inflation has gone wild during that time too. So, it's not like the income is doing much better than inflation, but the home buyers have to earn this much more because of the dual impact of rising interest rates and rising prices during that period. So this is now where we're at today. The housing market is basically grinding along the bottom at the lowest level of pending sales since the great financial crisis, basically since the event in 2020 that we had there. And it's brutal. I mean, I don't see any other way that we're going to get out of this. I think that we are absolutely in an affordability crisis. How the administration is going to solve that, I don't know. I don't think opening up more areas to build, because we don't have a supply problem. That is the biggest lie. The problem is not supply, it's affordability. There's just not houses in areas that are affordable. The builders are not building affordable inventory for the most part. In some areas they are, but for the majority of homes that they're building, it's just like, it's unbelievable, and the wages have not kept up. So I don't know how the administration is going to tackle this specifically, but all I know is whenever the government comes in and manipulates the market, there's always consequences to that down the line. It either creates a bubble or misincentive, or people game the system to make more money. So I'm not a fan of the government stepping in and trying to further manipulate this housing market. I think it needs to correct and prices need to come down. And look at this. This is mostly the boomers have all of the wealth in real estate. In the silent generation, that's the majority of the wealth. And this demographic shift is going to be changing drastically over the next few years. As sadly, 5,000 boomers and older will be passing every single day, and a lot of that money will either get tied up in probate. It'll be passed to the next generation, and they'll sell the house that they get. Usually, about 70% of people will sell the house, but the average age of the home buyer is getting older and older. The first-time home buyer is 38 years old, which is mind-boggling to me. It's about a decade older than it was, just the last, since 2008. But this wealth generational shift is massive, and the problem that we could see too is if we see prices come down for the boomers on real estate assets, they're going to be losing the majority of the wealth that they've built up during their lifetime exactly when they need it. So this is a strategic time. I understand the administration, what they're doing and why they're doing it, but continuing to pump these assets in these fake prices that have been completely manipulated by the Federal Reserve by buying mortgage-backed securities for decades, all the way back to Bernanke. Yellen did it. And now it's still happened during the 2020, 2021 years for a long period of time. It's just artificial inflation of housing prices by manipulating interest rates. I don't think it's a good thing to do. I like the economy to work for everybody. But look, the marketers understand this. The consumers care about payments. This is exactly what they did with the car market, right? So you can see the 7-year loan there on the yellow is starting to spike up, and the 5-year loans are starting to go down. They understand, like, hey, we can raise the price of the car, but we can also change the maturity in the duration of the loan that we give customers. So, we could be seeing something even like 40-year loans out there for mortgages, which is crazy. And that would make the payment lower, something like that. Just the interest that would be charged over the period of the loan would just be absolutely insane. I don't know if that's the right way to address it, but that would make the payment lower. So I'm thinking of every single way that the administration could start to work on this, and maybe they come out with a 40, 50-year loan where, that's just what the norm becomes instead of the 30-year. And that's the way that, you can get these younger generations in to buy this home. I don't recommend it, but that is an option that they could take from the car market. And of course, just because the payments are so high, the pending sales have been falling just really, really drastically. And I'm curious to hear from you. Will Trump save the housing market? What will happen next? What's happening in your market? It is interesting that the administration is actually coming out saying that we are at a national emergency. There's real estate agents out there who are still pitching everything is sunshine and rainbows, even while the administration is saying this. And this is like the best time ever to buy, best time ever to buy. There's even people who say, we're going to see a massive number of buyers enter the market next year. They're not adjusting for the demographic shifts from the baby boomers passing, and I just feel like they're lying to just try to get sales. It's sad to see, but at the end of the day, I'd love to see what you're saying. Follow my Substack. I'm happy to share more information there that I can't say here on YouTube. So if you have any questions, feel free to look up my email below. Happy to get back to you as soon as possible. And as always, thanks for watching.